Ziad, thank you for joining us here today for a conversation around DarGlobal, approaching your 5-year milestone, I understand, and also obviously having a conversation at a critical time in the region. This week is a fortuitous time to have this conversation, given the news of an encroaching deal for the Strait of Hormuz, which obviously will have a rebound effect across the economies of the Gulf. I think that's the most obvious place that we need to start with, especially given the importance of the real estate sector to the region. Um, does this give you confidence? How does the recent news make you feel?
Obviously, we're glad that this conflict is finally and hopefully ending. But I want to take this opportunity of this question to say something that many people forget, especially about the GCC countries. Because after the conflict is over, the markets will rebound, and most of the markets, they have what it takes to rebound, and many other markets, they don't have what it takes. And many people are putting a lot of speculation on the GCC countries, the UAE, Saudi, Qatar, and the rebound and the liquidity in the market, and the fact that for the last 5 months there has been no sales of oil or very weak sales of oil and gas and what have you, and shipping and trading. But all of these speculators, they forget a very key important metric in the GCC, that the debt levels, the governmental debt in the GCC are among the lowest in the world. While you take countries in the G20 and you remove Saudi and you add UAE and you add Qatar, while most of these countries are at debt to GDP levels of close to 100% or over 100%, the debt levels in the governments of the GCC, among all of them, is in the 30s or even lower. This gives these governments a massive propensity to jumpstart their economies much better than any other economy in the world.
That's interesting. That's more of a conversation around the fundamentals for the region overall, and I'm not sure that's one I considered before. So, apart from that sort of macro overview that you're looking at from how fundamentally the region has this sort of steadiness to it, what is there for Gulf businesses that let them carry on working? I mean, through this whole crisis, you obviously at DarGlobal have kept on launching. We'll discuss some of those projects soon. You've kept on selling projects, kept on growing. Where does that kind of steadiness, if that's the right word to use, come from for Gulf businesses?
So, apart from the very solid demand and patronage that the GCC has from local and international investors, one of the reasons I mentioned my first point is that these markets rely very heavily on the support of government spending. So having such low debt levels still allow these governments in the GCC to spend and jumpstart the economy to pre-conflict levels or even better, because the liquidity in the markets is created by the governments in this area. And the fact that these governments are still having and enjoying a low debt to GDP, they can still do that. It's not needed on the long term, it's only needed on the short term. So businesses and people who are investing and trading and setting up businesses in the GCC, they recognize this, and they recognize that as after each and every conflict in the region, or some sort of a gray or bad situation in the region, the governments responded by spending and increasing liquidity in the market, which jumpstart all these markets to pre-conflict levels.
I mean, I agree with you. I think the expectation is that we will see governments continue to come out and support private businesses. I suppose the question would be, what kind of support will you see? Because there's lots of ways of injecting liquidity into the market, whether that be government projects themselves or through lower costs, whatever it might be. Where do you see that going in terms of how they will twist that and pull those switches and levers?
This will depend on the country. So Saudi is different from the UAE, different from Qatar, different from Bahrain. So this depends. It depends on the each and every country. Primarily, for example, for Saudi or Abu Dhabi, launch of more governmental projects, spending more in the economy will definitely produce a lot of positive traction. From Dubai, where we need to work on bringing the international customer back at the same numbers that they were coming in pre the conflict levels, will be in what kind of new advantages we can give to that international customer to bring them back to, I would say, the 2025 levels. Same thing will be also in Qatar and in Oman and Bahrain, where the market is primarily an international market and relying on international investors. And Saudi, for example, because the market is a very big local market. So the market in Saudi is close to 600 billion riyals annually, just local. So reigniting that market also can be supporting in mortgages, relaunching a new mortgage program to increase further home ownership and help the new home seekers. Already Saudi opened the door with a new freehold law allowing foreigners to invest in Saudi and get a lifetime visa for an investment of 4 million riyals, which is also, we are expecting once this conflict is over for more and more international investors to engage in the market in Saudi, because also when you have a very big local market and an international investor, people see it as like some sort of an airbag. So even though not a lot of international investors might come in, but we still have a very big local market to lean on. So these are the expectations, and I wouldn't say the expectations. This has been always a track record. Every time this region has been hit by a certain problem, the track record of all of these governments is to come forward and to support the new growth.
Last question on this, and then we'll move on, because I think it's pretty pertinent to the long-term conversation. As you mentioned, every time something happens, the governments of the region have stepped in. They've secured new growth, and I think the long-term track record of the Gulf speaks for itself. That being said, I do think this particular regional disruption is certainly got more eyeballs on it than many of the others that we've spoken about before. There is a big opportunity here, I would argue, for the Gulf to showcase itself to global investors and the global economic community of its long-term stability. Do you think that's a realistic outcome here, that we could be looking back at this in 12 months' time and investors go, wow, this region has proved itself for its long-term stability?
So the first key element that people look for when they look at the Gulf is safety and security. And even after 5 months of conflict, I still believe nobody doubts the safety and security of the various cities and the countries of the GCC. Sorry, if this conflict was for 5 months in any European country, the looting and the stealing and the theft would have gone through the roof. We have not seen a single incident across the GCC. So that element has been protected and protected very heavily. The second element that the global community will be looking for is the strength of the financial system, the strength of the banking sector. And here where governments will support and always support, and the fact that they have low debt levels, central banks will continue to support very heavily the banks, so that people will continue to see the resilience of the banking sector of the GCC. These are two very important elements to demonstrate the long-term stability of the GCC.
Well, let's talk about long-term stability and also long-term growth, of which your organization, which is, as I said at the start, is coming up to 5 years now. I've got the numbers here. Last year, I think DarGlobal's revenue more than doubled to $539 million. Net profit jumped a staggering 580%. That's obviously a story about international investor appetite. That's a group that you guys are going after. How would you attribute those numbers? Where does that success come from?
So we started out in 2021. Actually, we started in 2019, but the pandemic slowed us for approximately a year and a half to launch finally the project, our first project in June of 2021. And from day one, we went out to establish a company for global citizens. We realized across the globe, more and more people are not living in one house. They're not living in one apartment. They're not living in one city. They're not working in one city. And yes, we're talking about the affluent customer, and that affluent customer wants to have more security, more comfort, more privacy, and they are engaging in buying properties across the globe. And more, we see people, rather than just buying properties in their hometown, they're making an investment in a cross-border property for so many reasons. One is investment, another one could be education, it could be a retirement home, but it's a growing phenomenon that has been growing for the last 20 years. So we've built a company that caters to all of these global citizens. And we've set up shop in all the cities where you have at least 40 nationalities buying into those cities, starting from the biggest international market in the world, which is central London, to go after south of Spain. We are now looking at finalizing projects in Greece, and obviously our home ground, which is Dubai, Ras Al Khaimah, Muscat, Doha. And once we saw that Saudi is opening up, we came back to Saudi with opening up projects in Riyadh and Jeddah. And before some of the problems start in February, we offered our Saudi projects to the international markets, and it was amazing that we were able to get 30 nationalities to buy from us in Saudi. And when you are dealing with such an investor, with such a buyer, you need to have a different kind of customer service. You need to be very close to the customer because they're buying mostly outside their homes. They need support on handover, management, problems. Like I just got a request on my WhatsApp from one of our biggest clients. And he said, listen, I don't want to disturb you with this, but my tenant in one of my apartments has a problem. He can't find the hood. I said, no problem. We'll get you a new hood. Don't worry about it. This is a customer that has with us around 20 units. So you need to be much closer to your customer because this is the customer who bought from us in Dubai, who bought from us in Muscat, who bought from us in London, and who bought from us in south of Spain.
I mean, that sounds like you're really targeting repeat customers for yourself, building a relationship with your customers. Do you see your customer base changing in terms of where these global citizens are coming from? Do you, for instance, see more customers coming from the East Asian market, less so from Europe? Are you reflecting broader economic trends?
You see, the customer would move along the incentives available across global cities. And the customers will move also based on the economic activity in those cities. Yes, the only positive thing that came out of the pandemic is that it created the opportunity for so many people to do business in more than one area without physically being in all of those areas. So now you have people, for example, from Sweden who spend their winter time in Dubai and their summertime back home in Sweden. So they enjoy good weather throughout the year. And consequently, these people are utilizing the fact that they can operate out of their hometown, given the fact that we all accept now to do meetings on Zoom and to work remotely. So the movement of these people will be tax incentives, will be security and safety concerns, will be new trends in new areas. The clear example of that is Dubai and Miami. So in the last 4 years, people saw in Dubai a stable place to set up shop, a stable place to be a tax resident of Dubai. This is why we've seen a massive surge in the companies being established in Dubai and many people moving to Dubai consequently. The same thing in Miami. Miami doesn't have personal tax and doesn't have, they are actually going through a law now to abolish real estate tax. Consequently, many people moved to Miami for tax purposes and for, imagine, Miami today is more safe and secure than New York.
Although I would argue they do have a bit of a space constraint in Miami that we don't have in Dubai. Look, I'm gonna use a quote that you are yourself on the record as having said before, which is that Saudi Arabia is impossible to ignore. You mentioned earlier a pretty critical rule change being opening up of property ownership to foreigners for the first time. How do you think that affects this conversation around the global investor and global citizens? Is this the moment where we begin to see an upsurge, conflict aside, a change in that dynamic?
So Saudi is the last G20 market to open up to foreign investors. And it's not only just opening up. So like it's like I forgot to close the door and now suddenly I open it or something like that. No. This has been part of a plan that has been happening for the last 8 to 10 years, in which Saudi have worked on infrastructure improvements, massive infrastructure works, including aviation, airports, roads, highways, internet, telecom, technology for onboarding people and companies, safety and security systems, and at the same time creating the Saudi brand, advertising for Saudi, opening up of the markets and the economy, freeing up the market from so many constraints. And only after, when all of this is ready, they announced the opening up of the real estate sector to non-resident foreign investors, which is a very important area because the fact that Saudi is a G20 economy, 600 billion riyals, local real estate market, an economy with very low debt to GDP. And this will be very important from a real estate perspective. 50% of the people are less than 30 years of age, a very young economy. And the annual rate of growth of the population is around 3.5%. This is heaven for real estate. Add to that, that the most important attraction in Saudi will always be religious tourism, because the pilgrimage to Mecca and Medina is not an option, it's an obligation. And it will always be a requirement. So people have to come here. How can you ignore Saudi? Add to that all of the international activities and events that the government have secured in the next 10 years. You don't see that in a single country. Today, you have the World Cup running in Mexico, the US, and Canada because of the size of the new format of the World Cup. In 2034, it's going to be accommodated by Saudi alone. Apart from Expo 2030, apart from the Asian Games, apart from the FII, and all of that. So, yes, it is impossible to ignore Saudi. And the test that we have done with the international investor showed that people are very much interested. We were able to attract 30 nationalities in no time.
Oh, according to what I saw, DarGlobal actually serves buyers from over 125 nationalities.
Yeah.
That
Yes. Yes.
being able to accommodate 125 different people, let alone 125 different nationalities, must be a challenge in itself. Where do you see, other than this need for safety and security, is there are there similar threads that sort of cross across nationalities from what they need or what they want, or what have you learned about the consumer over the past 5 to 7 years?
So in the context of Saudi, because it's the new thing. So the investment platform makes a lot of sense. People can see that the market is just opening up, and the next 10 years, the growth is going to be substantial. They see that they're also investing in a currency pegged to the US dollar. They're not taking exchange risk. They see also that they are investing in a market with no capital gains tax, no real estate tax, no repatriation tax, exit tax, no wealth tax, which makes a big difference for the investor because you don't want to have your investment portfolio changing every time there's a change in the government, like what's happening in the UK. Can't work like that. So they see this as stable and very much competitive. In addition to that, whoever wants to do more business and banking and what have you in Saudi, they can opt for the golden visa, which is also a very important part of the combination. This is why we believe most of the nationalities that we deal with will be attracted for an investment in Saudi. And in just 2 months, from the 125 nationalities we deal with, 30 engaged with us and already invested in our off-plan projects in Saudi.
So let's talk specifically because there's one name as well that's been associated with a few of DarGlobal's projects, and that is, of course, the Trump Organization. You alluded to this earlier. The projects that were announced in January in Riyadh and Jeddah, I think, was around $10 billion worth of Trump-branded projects. What do you think it says about Saudi Arabia in particular that the Trump Organization keeps choosing to do business there and also with you?
So I started working with the Trump Organization long time ago, 2012 to be specific, and long before they were associated with politics, because we saw in that brand a brand of luxury, a brand of exclusivity, a brand of in your face, a brand of being, a challenger, and people like these aspects. And leave TikTok and what's happening on TikTok and what have you. The investors who can actually afford the brand, they understand that. They don't look after the political aspect of the founder of the brand. They understand that it's a brand of luxury, exclusivity, customer service, a brand that is non-apologetic, a brand that is a challenger, and they understand also from, yes, what has happened in the last 10 years. Today, the brand has an awareness that did not exist before. True. But this is only in terms of awareness. And everybody understands that high awareness means more value to the investment. I can assure you, we will go now to some countries in Africa. They would not know Coca-Cola, but they will know the brand Trump. So this is very much important in an investment platform, in a hospitality platform, in a brand that is appealing to a global audience.
Yeah, I don't think anybody could realistically sit and argue that the Trump brand has not grown in recognition. Couldn't agree with you more. Last question for you here, which is connected slightly, just because it involves a Trump hotel in the Maldives in particular. I understand you partnered with World Liberty Financial to help tokenize the hotel and offer a new option to investors. This is a really interesting topic because we take aside that obvious bricks and mortar part of real estate itself and talk about the technology side and being able to offer something new to investors. What do you think this offers ordinary investors that maybe they wouldn't have had access to before? And where else do you see the impact of technology in the real estate industry beyond the sort of the impact in the actual physical side of real estate?
So I've been in this tokenization world since 2016 and mainly meeting with the regulators because tokenization solves the two biggest problems in real estate. The first one is transparency, and the second one is liquidity. People will always tell you, I'm going to invest with this developer, but that development for me is a black box. Who is buying, who is selling, who is paying? Put that on a public blockchain, and everything is there. At the same time, you buy an apartment or a house, the next day you want to sell, you have to list it with the broker and wait for the customer to come. While if you're trading an investment in an apartment, like if you're buying a Microsoft share, then it becomes super liquid. So tokenization of real estate is a necessity. It has been propagated in the wrong way, which is tokenizing apartments, tokenizing ready apartments, putting those apartments for rent, and making sure everybody generates 2 to 3% of that rent. You can invest as little as $1,000, and you can get 2 to 3% out of that. This is a hobby. This is not business. The real business is what we are doing in the Maldives, which is tokenizing, and for the first time ever, tokenizing at the level of the development. So everybody who buys a token will become our partner in the development of that hotel. And during the build phase, they will be paid to wait at the level of an interest rate that you can get from the banks. And once the hotel opens, they will be partners in the revenue and the profits of that hotel. And once we decide to exit in 4 to 5 years, they will recap the full exit benefit of that project. In this way, we are estimating that they will make 20 to 24% IRR on their investment. And this is what makes sense. This is how you can invite today all the crypto environment to get behind a new way of selling real estate, which is the tokenization of that first project we have in the Maldives. And we believe this can be the model for so many real estate developers, rather than going to the banks and doing a GP model and an LP model and senior debt and junior debt and mezzanine debt and pay so much fees to the arrangers and to the bank. You can just tokenize a portion of that development and bring in investors into that project.
I mean, you sold me on the idea. So look, 5 years from now, last question for you here. You have master plan communities coming, hospitality projects, some of which we've mentioned already. When you look back in 5 years' time, how do you think you want DarGlobal to be associated with the region's overall story? Where do you think you're going to sit in that growth journey?
We would like to sit globally. We are so proud to be a startup from Saudi Arabia launched to the globe, but we want to be associated with the top 50 real estate global houses. I say houses, not developers, because development alone will not allow us to grow globally. Development is the sector in which we started, and we will continue in it, but then we'll move into hospitality, into entertainment, and very importantly, into asset management. So asset management will allow us to grow broadly across the globe, bringing with us additional investors. So we would like to sit with at least the 50 top global houses of real estate.
Ziad, look, thank you very much for your time. It's been fantastic to speak to you again, as always.
Appreciate it.
Fascinating insights. Thank you again.
Thank you. Thank you. Thank you.